Hey, this is David for Big Bits, and we are doing a daily update here. First of all, I want to say that the price continues to drop. If you're watching the charts, that's pretty obvious. But there is a little bit of hope. I know we broke the 200-day moving average, but we are coming up on some potential support. A lot of people are mentioning 7.7 as potential support. And one of the estimates, I'm going to change some of the values here so that we can get a look at really what's going on. Okay, so this 350 day is a 50-week moving average. 7 days times 50, 350. So it's a 50-week moving average, and you can see it's kind of hovering down here. Seems like it might be fairly important. As you can tell, I think when this broke here, it was a pretty good indicator it was going to continue to go on. And back in the bear market, it actually acted as resistance twice as price failed to break it. So I'm kind of keeping an eye out to see if we continue past this support in this 7.7 to 7.9K range, that it very might well head down towards 6.7, 6.6, where coincidentally we had a lot of consolidation, in which case I would hope for it to turn back around. Now there's several reasons, and I posted on my TradingView profile an idea, called it the glass half full approach, and I'll actually show you this in just a moment in a little bit more detail, but this is essentially the same chart we're looking at. And take a look at the oversold RSI levels and the oversold stochastic RSI. They're pretty familiar to some stuff we've been looking at before. This long period of oversold levels, I'm not certain that's going to happen again. If you go on to my TradingView profile, which should be in the description of the video, if you go into the TradingView profile and you look at this idea and you read it, you're going to see, I go back quite a bit, and we'll look at that chart in just a moment, but this price breakdown here is different than what we're dealing with now, and it's very fundamental. You can see price was much tighter for much longer. Just the period of time from this very narrow range of just a few $100s lasted from September all the way through the middle of November, and we've been consolidating in a pretty wide range comparatively for 2.5 or 3 months as well. But look how many times that level of support was hit before it was finally broke. That support goes back quite a while, all the way back to here. Yeah, that was the first time it touched that support. It goes back quite a while, so the price consolidated for a very, very long time, which in turn created a very, very large breakdown with very much historical or historically low RSI levels. Bitcoin reached its lowest daily RSI ever when it broke down here on, I believe that's November 19th or November 20th of 2018. It was the lowest RSI ever. Now you'll notice the price kept going down, and it created some sort of divergence here on the RSI chart, and when it finally broke out of the oversold levels, it had a pretty good pop, and then we entered that very bullish period earlier this year where prices expanded, and I honestly think they expanded a little bit quicker than they should have. I think people were just a little bit too excited to see the Bitcoin prices coming back up. Once it broke 6,000, especially once it broke that, I think they were really excited and just kept going and going, and it was a little bit too much too quick. But now I think the prices have only been consolidating for a few months, and the breakdown actually have some support behind it. Yeah, back here we didn't really have a whole lot of support other than some brief pit stops on the bull cycle in 2017. Here we have quite a bit of history, and particularly this $6,500 range where our 50-week moving average happens to be, could could be the line where price turns around. It hasn't tested this line since turning back where prices have crossed over. It hasn't retested that 50-week moving average, and it doesn't have to because it didn't do it in the last bull cycle. But I think it very well could. And as they say, previous performance doesn't indicate future results, and these things could change. If you've seen the logarithmic charts on Bitcoin, you'll know on those prediction sites that just because, and I'll load one up here, just because it's happened in the past doesn't mean it's going to happen in the future. Plus, not only that, since the price is getting higher and higher, it's going to be harder and harder to get the same amount of gains. And I'll show you that with what I mean here. This is moonmath.win. It's a simple logarithmic chart. They show you the calculations here for it. But you can see over time and on a log chart, this has to flatten out somewhat, and I honestly think this is too optimistic. But even if it levels out and it only goes up to the orange here, that's still several $100,000. So you just have to be mindful of these sort of things with when it comes to the price and the possibility in the future here. Okay, so back to this. And back to my point, I think I went off on a tangent there. But anyway, we're at very much oversold levels on stochastic RSI. When they usually get to zero on these lines, they usually have either a period of sideways movement or a pop-up. You'll see here, it actually kind of continued down. So it'll continue to rise, but the price will continue to fall. And when that happens, when this rises and the price continues to fall steadily like that, it's a pretty good idea, pretty good guess, I would say, that it would indicate that prices are going to shoot back up quickly. And of course it did, and it shot back down. This is the stochastic RSI, and it goes really quick. So don't worry too much about that. But back to our RSI, you'll notice we're at negative 20 something. And in the entire history of Bitcoin, it's only went this low a handful of times, maybe two handfuls, if you just count the amount of times that it went below in a relative short period of time. And to look at that, we're going to look at the BLX chart, which is the Brave New Coin Liquid Index, and it has the longest set of data for Bitcoin in its history. And this is the daily chart. I'm going to keep it on the daily chart because if we change it to the weekly, RSI values obviously won't be the same. Let's continue to zoom out. Oh, is it going to let us? Oh no, that was the end of it. Okay, so we've got the entire Bitcoin price history that's available to us on this chart. And look where our RSI is, negative 20. Hopefully you can see the line that I'm pointing to, and you can see just how many times it's actually ever been this low. And I've already mentioned how I think the large breakdown from 6,000 in the bear market was kind of an anomaly compared to what we're dealing with now. So if history is a lesson here and it does repeat, then it seems likely that it's going to bounce pretty soon, at least with the RSI. And a lot of the times when it bounced from these very low levels, it moved back up pretty swiftly to overbought levels. Here's one that went oversold to overbought relatively quickly, oversold to overbought relatively quickly. This one almost touched overbought right after going oversold. This one, same thing. This one was during the bear market, and I would say this might be reminiscent of this period of oversold levels. So it might be another kind of anomaly there, but here is another one during the bear market. It did a double touch down there, but it had a nice W that it formed there. You can see that on the chart, but it didn't even get as low as what we are now when it did that. So like I was saying, this is pretty historic levels here, and judging on the chart, there's about a 50% chance, if this is not a bear market, that it's going to go straight back up into the overbought territory in a few weeks. That's just based on what we've seen in the past. And obviously, that doesn't mean anything about going forward. And I'm not telling you to buy or anything. I'm just telling you that it might be an opportunity here in the short term to get into a position for myself. And I don't know. It goes back to an idea that I was told when I started to learn to trade, and that was you need to think like the market maker. Now, I said earlier in the video that the prices probably went up a little bit too quickly. They started going parabolic earlier in the year, and everybody was drawing these parabolic lines, trying to explain why the price was going up so quickly. And it didn't seem right that the price would go up that quickly from finally breaking back above 4,000 here. It shot up from April to June 26. What's 2.5 months? It went up $10,000. It's an incredible movement. It was too fast. If you're the market maker, and let's say you are the one person in control of trading Bitcoin, if you push the price from $3,000 to $14,000 within a period of months, and you were heavily in profit because the entire time it was down here, you were buying because you control the market, and you pushed it all the way up here. And finally, everyone is starting to think that, you know what? It is going to keep going back up. It's going to reach all-time highs any minute now. Well, what would you do? What would you do if you controlled the entire market and you pushed the price up this far already? Would you continue to push the price up and let other people hop along so that they could sell theirs higher too? No, you're greedy. So what you're going to do is you're going to make the consolidation, and you're going to make it go down. You're going to shake out the people who bought in late. Look, there was no huge correction here. There was no consolidation for the most part. And now you're making those people who went long up at the top pay. And that's a really smart way to trade when you're trying to make money. And I don't know anyone who's trading who isn't trying to make money. And if you got the most money, you do the most to make the most for yourself. That's a lot of most, but it's the truth. It's just like a game. If you control all the pieces, you're going to do everything you can to benefit yourself the most. I'm not saying anyone does have control of all the pieces, but there are people who have substantial control over the market. And if it was me, I would have done the same thing. You know, build all this hope and then just shake out the weak hands. Maybe that means, you know, just going back to the 200-day average, or maybe it means going back to the 50-week average, or somewhere in between. But you can't make it easy for people to make money, otherwise you won't win. If it's easy for everyone to make money, who's going to lose? When you're buying and selling things, and you're trying to make a profit on buying something cheap and selling it when it's more expensive, somebody has to lose. Not everybody can win, and if you look at the numbers, that's very true. Most people who do trade don't win. So that's one tip that I learned that I really appreciate and I use when I'm thinking about charts, is you always have to think about what would benefit the person who, if they had entire control of the market, would do. And I think this is exactly what they would do. I really do. Okay, so moving on. I think that covers Bitcoin pretty well. I'll just take a look at Ethereum real quick. Okay, yeah, that's not too good. Let me remove this stuff off the chart. Yeah, it's not looking too good with the moving averages. Let me turn my Bollinger Bands back on. Yeah, it's not looking too good. I mean, it is really low on the stochastic RSI, but that doesn't mean a whole lot when your RSI isn't already low either. And it's leaning towards the bottom of the Bollinger Bands, had a golden cross, or a death cross, excuse me, down. I mean, it doesn't look good. Let's look at it versus Bitcoin, though. Not terrible versus Bitcoin. The thing is, I think the ratio versus Bitcoin could rise, and it could test that 200-day moving average. But at the same time, that could just be because the Bitcoin price could continue to go down and Ethereum stay relatively close to what it is versus USD now. I don't think there's any more I want to cover right now. I'll get into altcoins and stuff on a weekly video. But continuing on, make sure you check out the profile. I've published a bunch of scripts. I've done the scripting tutorial series, and I have a couple of more videos recorded for that are going to go out later. I think I have one tomorrow and then 2 next week, and then I'm working on some different content, and then we'll pick back up into the scripting tutorials again later. All right, so this is pretty cool. There's an indicator called stock to flow chart. Let me see. Do they not have the picture that I'm looking for? No. Of course. I clicked on the article and it doesn't have the one picture that I wanted to see. Essentially, there's an indicator called stock to flow that you can check out, and essentially the price has been the actual Bitcoin price has pretty much been an average of what the stock to flow would have been, or averaged out. The Bitcoin price would have been pretty much a line that would have been created by stock to flow. It's pretty interesting, something to check out. I think 8.4K or something like that was the actual stock to flow value for Bitcoin, or 10K was, and it dropped below that on the crash the other day. So something to check out. Usually it's related to the halvening, the stock to flow, when the price shoots back up. I don't really understand the stock to flow all that much, but a lot of people have been talking about it, and it's something that I wanted to show you, but they don't have the one that I was looking for here. Maybe I'll plug it up in another video. That looks like an advertisement. Thank you, Brave. The Bitcoin network hash rate mysteriously flash crashes by 40%. Now, if you saw this, don't believe it. The hash rate, and I didn't even know this until this happened the other day, the hash rate on the Bitcoin network is estimated. It is not a number that is reported by the miners that the network stores anywhere. It's just calculated based on how quick the blocks are coming in and the difficulty. That's really all it is. So that's why you get these constant fluctuations, but the average hash rate, which would be somewhere in the middle of all those, is probably more accurate representation. And it crashed 40% because there were several blocks mined one after the other very quickly, which they're supposed to be about 10 minutes apart. But if the miners get really lucky and they get them successively one after the other, then it could make these estimations think that it's going incredibly faster or slower, depending on, if it took 20 minutes between blocks, it could make it think it was going slower, which could cause the crash in the hash rate estimation. So it's just something to keep in mind. These hash rates are calculated, and how I told you might not be the right way, but the important thing to know is that the hash rates are calculated. They aren't actual numbers that the network has. So it's good to know that. Now this one is really interesting, talking about tokens and just crypto finance in general. I don't know who this guy is, and I'm a pretty big college basketball fan. Maybe he's a foreign player who's coming over to America or something. I don't know. I don't remember seeing this guy's name. I'm a Kentucky basketball fan, so if he didn't play against Kentucky or on a major team, then there's a good chance I didn't know about him. Anyway, what he's done is he's gotten a guaranteed contract, so he's going to be guaranteed to pay $34 million over the course of 3 years. Now, the first year of his contract looks like he is guaranteed like $16 million this season. Okay, what he's doing is he's tokenizing his first year's salary so that he can get paid up front. So instead of him collecting his pay, week by week or however they get paid, game by game, he is going to tokenize his salary, and the people who buy the tokens will get their portion of his salary as it comes in. Meanwhile, he gets all of the money up front. Now, of course, he's not getting the entire 16 million. He's only going to end up getting 13.5 million because there's got to be some sort of draw for people to want to buy the tokens. But it's pretty neat, and I'll be interested to see if this is a trend in the future. Now, personally, I wouldn't have done this if I were him, because that's $2.5 million you're giving up, and you're telling me you can't live on your paychecks being like $100,000 each. I don't know. I don't understand it personally. Maybe there's another opportunity he can get in on that's better. I don't know. It doesn't make a lot of sense to me, but maybe it's a trend that we'll see happening. Maybe there's something I'm not thinking about. I'm no financial expert when it comes to things like this, so who knows what he's up to. But it's interesting to note that this is happening, and maybe it's going to set a precedent for other players. We'll see. But thanks for watching. That's all for tonight. Had a lot to go over. I'm going to be pretty busy here soon, so might not have an update in the next day or two. We'll see. But thanks for watching. Have a good one, and see you next time.